I think your biggest threat, I would say, but potentially opportunity in our sector is the likes of Revolut, Monzo, deciding to come, okay, I want the piece of this market now, and actually spreading their wings, rolling up their sleeves, going, okay, it's time.
Yeah.
Because they're sitting on so much cash. It'll be interesting to see if they do make a play for it. We've started to see a couple of titles at some of these organizations for with lending against it.
Interesting.
It'll be interesting to see what happens there.
Yeah.
But I think that would be a proper game changer if they were to.
Yeah, absolutely. Welcome to the Property Funder podcast. I'm your host, Michael Dean. It gives me great pleasure to introduce my guest today, Mark Pozniak. Mark, if you haven't been living under a rock, it's a bit of an industry legend. I'll try not to fangirl over Mark too much. But Mark's now. What's your title now at Maslow?
So I'm the managing director of short-term lending across all of our European short-term lending franchises. So we have offices and businesses in the UK, Ireland, Spain, Portugal, Italy, France, Germany, and the Netherlands.
Wow.
So I spend a lot of time on an aeroplane with our teams on the ground. So we have specific Maslow teams in most of those countries, and some different Arrow teams in some of the others.
Yeah.
And it's been a really, really exciting 3 years so far.
Is it 3 years already?
3 years.
Wow, that time has really flown, hasn't it?
Yeah.
Wow, that's incredible. How how would you contrast the different markets? And you obviously we've only got limited amount of time.
How long have you got?
Like what? Because my impression is, some of those markets are much more highly regulated. Versus the UK. Some a bit more comparable to the UK. But like, what's the, how would you distinguish them? Very briefly.
Okay, I mean, I will do it purely from a short-term lending perspective. Obviously, that will cover a little bit of development funding, which Maslow do as a whole. But what you find in each country is every single country, despite it being Europe, is different. So, for example, in Portugal, you have tax issues, you have structuring issues. In Italy, you have usury cap issues and time to repossess issues. In Spain, it's about the structure, the lending structure, the borrowing structure, and how you actually get funds out the door. And what you find is the types of loans in Europe are typically slightly larger, slightly less, I'd call them programmatic.
Right, okay.
But high quality transactions.
Okay.
In the market most similar to the UK, I would say is Ireland.
Sure, which makes sense.
Which makes a lot of sense. But again, even in Ireland, you have your own challenges there in terms of the residential market as a whole in Ireland is so highly liquid that when a property comes in the market, because of the lack of available stock in Ireland, it just moves so quickly. Yeah. So that need for bridging, and we're not regulated. We don't do regulated bridging loans. We do investment loans and what have you. So that does put a real challenge in front of you, although it does feed the developer exit
I guess
model.
the other side in Ireland as well is it's although it's got a lot of similarities, it's a small market. So
it is.
One of my friends from Reading University, he's got like a sort of top 5, top 10 house builder in Ireland, but they build 23,000 houses a year in Ireland, right? So like a tenth of what we build over here, and the amount, the land market in the UK at the moment is, I won't say it's on its knees, but it's very depressed by comparison. Whereas in Ireland, Alan's saying to me that he's a net seller of land at the moment of the consents that he has, because people are paying him so much money for them. It doesn't merit the risk of building it out. So it's definitely an interesting market.
I think what we found and what we see, because actually I did a little bit of analysis and I spoke to the team at the end of last year, beginning of this year, just about each market and what they feel for this year. And Ireland is one of the most positive responses I had from all the teams. The guys are talking about 7% year-on-year growth. The fact that it's not the challenge there is infrastructure rather than the same sort of challenges we face here in the UK. It's not about, you can get the consents, the government is really supportive, but it's actually getting the infrastructure to then go and develop and what have you. And what we heard this, what we seem to be have a pretty USP, a big USP is that we have a full life cycle lending proposition across Europe. So we can assist with the land assembly. We can then move into the development, then move into the stabilization or developer exit. And it's quite a unique proposition to be in.
Absolutely.
The other thing, just going back one step, trying to build businesses across Europe from London, I think is a recipe for disaster.
Yeah.
And what we're so fortunate in is that we have the local expertise on the ground.
Yes.
So we don't rely on London to underwrite or originate the transactions. We have origination and credit functions in each country supported by our centre in London.
Yeah.
And that really has made a huge difference because you've seen so many people try and do it. From London, they say, oh, we're a European lender. We lend in Spain, we lend in Ireland, we lend in Italy. But actually, having the on-the-ground experience, the on-the-ground relationships with the solicitors, with the surveyors, with the advisors, that is where you really can protect yourself and protect your funds, which is one of the most important things in today's market.
It's really interesting you mention that because having worked in private equity real estate, about 15 years ago in a pan-European fund, one of the things that the company I was working for at the time distinguished itself from some of the other competitors was that unlike the sort of, like you said, the London-based firm, London-only based firms, the company I was working for had offices in, had a Madrid office, had a Paris office, had an office in Stockholm, and certain other places, Luxembourg, Germany, and as a consequence of that, because it had that local knowledge, it had local knowledge, but like you said, the local relationships as well. Wow. And look, if as we know, it's a lot easier to get a deal from someone when you can pop over to near their office, have a beer or a coffee with them, then trying to organise that coffee 6 weeks in advance because you've got to book your flights and all the rest of it. So that's an interesting model. I mean, I guess it's sort of fascinating in a way that, would you say that Maslow is the only lender of its kind at the moment that's looking to do that kind of pan-European what I call specialist finance strategy?
Yes. I think there are a few that will play in specific segments within certain countries. So, for example, on the large-scale development, you have Cheney, who will operate in Spain, they operate in Italy, they operate in the UK. On the bridging side, you have a couple who've dipping their toes here and there. Like there's one or two that do Ireland and UK. There's one or two that do UK and Spain.
Correct. Yeah.
There might be one who does Portugal.
Yeah.
We haven't seen anybody with the wide spectrum and the ability to actually execute across the different product sets as well as jurisdictions. And even us, it's not straightforward. We're fortunate that we have our parent company, which is Arrow Global, and all the teams and platforms. Arrow owns 24 platforms across all these different countries, of course. And a lot of those are servicing platforms. So you have such a deep level of on-the-ground knowledge, but more importantly of actually what's happening in each region because of the servicing experience. So you have knowledge sharing across the group, which gives some good guidance about where to lend, where not to lend, what to lend against, what's moving, what's not. And that's worth its weight in gold.
I guess that must give Arrow's ultimate investors, funders, enormous confidence.
Huge confidence.
Yeah, and I guess it's probably like a very much a virtuous cycle, because the more you do, the more knowledge you gain.
Correct.
The better the performance, and so on and so forth. Right.
Correct.
The move to Maslow and the move to a more European role. I think when you took it probably within the market there were some eyebrows that were raised.
Sure, there were.
I guess, you know, you're probably in a position now that if you wanted to just go again and create another behemoth of a bridging lender, you could. Was there an element of, look, I've done that now, I actually want, and the opportunity to do learn some new markets, new jurisdictions? Was that actually offering you a more interesting, more satisfying challenge?
Yeah, I think when the opportunity came about, it came about because, as you know, I set up Octane along with Jonathan and Matt in 2017. And we built that business from a standing start into a pretty substantial bridging lender.
Absolutely,
and still is one of the leaders today. When I left, we had a loan book of close to 500 million. We'd lent 1.5 billion. It was a pretty serious business.
Absolutely, yeah.
The opportunity came about with the recapitalization for me to exit the business. Jonathan and Matt wanted to continue. And I decided, you know what, I'll take it. I'll take 12 months out and I'll decide what I'll do. I actually genuinely didn't know what I wanted to do. I thought about, do I want to become a broker? Do I want to become an advisor to bridging lenders? Do I want to go again? And I actually had the conversation with Ellis. I picked up the phone to Ellis, who's a very, very good friend of mine. Ellis is the CEO of Maslow Capital. And Ellis, I said to Ellis, I've sold, I'm leaving. I'm going to take some time out. I had a 12-month non-compete.
Of course.
And I thought, you know, I'll take some time out. I'll spend a bit of time with the family, recharge the batteries, and then decide what to do. Thank goodness I wasn't in a rush. And I had a great conversation with Ellis, and Ellis said, you know, Maslow's on a very special journey at the moment. They'd sold, I think, half the business to Arrow already. The second half was already in train. They had always wanted to do more bridging, so they did a bit of bridging.
Yeah.
And Arrow did bridging already, so it's not like it's a new business for Arrow.
Of course.
And he said, come and have a coffee. And we had a coffee, and then he said, come and meet Zach, who's the CEO and co-founder and CIO of Arrow. And I said, okay, I'll come, but I'm not joining. Because I knew where he was going. Him and I have been friends for long enough. And over multiple coffees and conversations, and I said, okay, you know, it sounds exciting. I'll come and talk to you again in 9 months. And Zach's like, we could use your experience now. And actually, we could use your experience across our European platforms just to enhance what we're doing there. And yeah, next thing you know, 3 months after leaving, my first day at Arrow Maslow was on a plane to Ireland, to Dublin, and the rest, as they say, is history.
Yeah.
And it's been a really exciting journey when you look at what we've achieved in a relatively short period of time within the Maslow bridging team. So Maslow's been going for 15 plus years. I mean, more than that now. But if I look at last year alone, Maslow as a group, you know, we lent more than 2.5 billion euros across development, bridging, all across Europe. That's a substantial sum, and a big chunk. And a big chunk of that was bridging. But we don't shout about it, and we don't go in bridging and commercial and mortgage introducer and everything else and shout about it like I used to when I was at Octane. I used to be far more vocal on social. It's just a little bit more controlled, a little bit more spread out, and it's been a wonderful journey.
Has the nature of the clients or have the nature of the deals changed a little bit since you've been actively doing more bridging in the UK through Maslow?
Not really. I mean, we what we have got the capacity to do at Maslow is much larger transactions.
Yeah.
So we will operate in the bridging side anywhere from 300 grand all the way up. I typically would say up to 300 million, and normally people would say you're never going to do a deal like that. Well, actually, we closed one on Friday, which funded at 300 million pounds. It's going to go in the press this week. It is a large acquisition of multiple hotels in and around London. Wow. Not your standard bridging loan. It's not your standard security package. But we have the expertise in-house to be able to execute transactions all the way from the lower end to the upper end, and that spans across all of Maslow. So not just the bridging side, but you would have seen in last year's news that we did a £550 million student accommodation development loan spread across 5 assets. I'm not talking out of turn because it was in the press. So
I would have said that was probably very much in keeping with Maslow. What Maslow do. Yeah,
correct.
I think it's the smaller end of things that probably people are starting to take notice of, I suppose.
Correct. So what people didn't realize is that actually we genuinely have an appetite for small loans. and we love the granular pile them high, sell them low loans. We've got the processes in place, we've got the team in place, we've got the system in place to be able to execute those flawlessly, like we always have for the past, I can't believe I'm going to say it, but I've been in bridging for over 20 years. You understand what works over a period of time by getting it wrong. And the more we get wrong, the more you learn, the more you adapt, the more you fix your systems, the more you fix your processes, the more you adapt with your team to know what brokers want and clients want to get a deal over the line quickly with removing as much friction from the process as possible.
Yeah.
And when you get that right, you can really churn.
Yeah.
And the beauty is a lot of that now really just runs seamlessly. We've got such a strong credit team who've been doing it for a long time. So, when you look at my senior team within the UK who's running the bridging loans, they can do it standing on their heads. And that really does go a long way to giving the brokers, and I heard it in one of your previous podcasts, people are buying trust.
Yes.
And trust is everything.
Absolutely.
And trust to deliver and certainty of delivery is what gets you deals.
Correct.
And thank goodness over 20 years or so, not just me, but when I look at the team, Dan, Graham, Gemma, Peter, that's what they've built.
Yeah.
They've built reputations for themselves that transitioned across with them over the past 3 years and beyond to help us deliver that.
And in many ways, they're kind of your people as well, because they've worked with you now across multiple businesses.
Correct.
Correct.
Yeah.
You've got that. You've got a collective trust. I think that really matters. What do you think? What do you think a lot of specialist lenders, whether in the bridging or development refurb space, where do you think they get? What do you think they get wrong? What do you think gets in the way of them growing?
I think they're all chasing the same thing, and everybody's chasing origination.
Yeah. And
when you're desperate for origination, and you sometimes make the wrong decisions because you just want to put money out the door.
Yeah.
And it's hard because there's so much money in our space. There's so much liquidity. There's so many. Every time you open up the trade press, there's a new lender, a new funding line, a new fund. Even this morning, I saw an Australian fund launching.
Yeah.
It's every day, and then everybody is going after the same deals. And a lot of them, especially on the bridging side, are funded by the same people. So it's, okay, so what have you got to offer? So you're funded by either a Turak, a Shawbrook, a RBS, whoever. A lot of them are using the same funding lines, just cutting it ever so slightly.
Yeah.
And what have they got to offer? Okay, a reduction in fee, a tiny reduction in rate, a slight increase in loan to value. Actually, bridging is so much more than that. Bridging is around, and development's the same. It's around actually understanding the transaction, and more importantly, understanding how you're going to get your funds back.
That's true.
And then making the deal work. Because a couple of basis points here, couple of basis points in terms of leverage, that doesn't define whether you're going to win a loan.
No.
What defines whether you're going to win a loan is if you're sitting across the table from an introducer or from a client, and you look the client in the eye and you say, I can do that loan for you. I can deliver it for you by that date. And more importantly, I understand how you're going to repay me. That drives volume, and that drives certainty and delivery. When you're desperate and you're like, I'll beat any price, that's a very dangerous game. And that's what we're starting to see. It's very funny. Like where people will come to me and saying, here are the terms, can you beat them? And I'm like, I haven't even seen the deal yet. Let's discuss the deal, and then we'll see if we can put our best foot forward. But it's a dangerous game when you start playing like that.
I mean, we've been doing. We're into our 11th year now at Avemore, and I think where I would say we've probably gone the other way. Where I think there were times when we've been too cautious. But I definitely agree. I definitely agree with you. Like it's quite funny. I remember back in your Octane days, and I think there was we just come out of that first lockdown, and I think we had, you had a really good. At the time, you had a really good refurb product, and then I think we were just that little bit cheaper. And I thought, and I was still relatively inexperienced, I suppose, as a leader in the industry. And I thought, well, we're cheaper, and that was where the sort of the trust, really understanding about trust really matters. It's that when you've performed for a broker. the broker is in our space. The broker is always going to keep going back to a lender that's performed for them in the same way that the client will keep going back to the broker that performs for them. And I think I was like, okay. And the penny drops. I'm a bear of little brain, so it takes a while for
you
it.
You and me both.
So it takes a little while for it to work out, and you go, oh shit, that's it. That's what we had. That's what it's all about. And yeah, the 0.3 a month or whatever, 0.03 a month, the difference that it was like, it's not about that. It's like, look, they've performed for me. I've never worked with you before, and so yeah, it takes a while for it to work out. I think that people that are not in the specialist space, I don't think that they're like a lot of the time that they just go, well, it's like it's just price and leverage.
Yeah.
I mean, when you've trained salespeople, because we with the less experienced salespeople, like, oh well, we can't, it's like,
we can't compete.
We can't. It's like, oh, we got such and such bank's terms, we can't compete. It's like, well, they're a bank, we're not a bank.
Correct.
Like.
There's your first point.
Yeah, it's like we can do things that they can't do, right? So stop trying to compete. If all you've got to offer is price or leverage,
you're losing.
Forget it.
You're losing.
But what messages do you send to like the younger members of the team, particularly originators, to help them, help them differentiate themselves?
Yeah, it's a great question. The number one thing for me there is, I think, as you've already said, don't try and be something you're not. You can't be a bank if you're not a bank, and you can't be the cheapest if you don't have the pricing for the cheapest. What you've got, first and foremost, is a telephone and an email. And the first thing you can do is call them back quicker, respond to the email straight away, stay in touch, stay front of mind, don't just throw it into the office, understand the deal. When an originator who, if we get a new originator who's never worked with us before, they have to understand credit policy and credit appetite and how the two work side by side. Because you can look at a credit policy and say, okay, well, that's our policy. And at a bank, it's like, that's our policy, take it or leave it. But actually at a specialist lender, an alternative lender, you have a policy and you have an appetite and you have levers that you can move. And okay, what can shift the dial? And actually, the biggest thing that we would teach and train an originator is to ask the right questions. What is the most important thing for the client? Is it the completion deadline? Is it leverage? Is it price? Or is it just a combination of all three? And actually, when you understand the pain point, that's when you can focus on what the solution is. If you think the solution is always going to be lowest price, highest leverage, it's a very, very difficult game, because you're never going to be the person who is always the lowest or always the highest leverage. You may win some at the highest leverage because you understand the risk more than others, or you're happy to take slightly higher risk than others. You may have the lowest price for a certain product type. That's great. That'll get you so far.
Yeah.
But actually, what we try and teach originators is to be our front line and our first line of defense. And if you've got an originator who understands a transaction, as opposed to, yes, we can do that, here's a donut, here's a product sheet, throw it in, cripple the credit team, your service levels go through the floor, nobody wins. So actually teaching people how to look at a deal. So if one of our originators is in front of a broker or a client, they'll be able to answer the questions about, yes, we can do that, or that is right on the fringe. I know we can do up to this point, and I know that our pricing will be here.
Yeah.
I know what you want, and I know what you need. I know that in order to make this deal work, I've got to maybe just push the boundaries out a little bit.
Yeah.
And that's a skill in that as well, because actually sometimes the skill is, do you have anything else that can just give us that little extra bit, whether it's a second charge in another asset, whether it's there's an event happening a couple of months down the line that's going to increase the value of the security. But that comes with looking at hundreds, if not thousands of deals over a prolonged period of time. But we're fortunate, like at Maslow, and even in my Octane days and at my Octopus and Dragonfly days, we've worked with some fabulous originators and credit people. And I think we're very fortunate in that. And actually, I can go back even further to my Cheval days. And if you look at my Cheval days and you look at where all those people are today, You've got Gareth Lewis, he's the CEO of MT Finance. Alan Kay is the CEO of ABC Bridging. Ellis, obviously, who was the CEO of Chevelle, is the CEO of Maslow. Gavin Diamond is the CEO of Inspired Lending. It was just such a great breeding ground and training ground for what bridging actually is. And that really, the late Benson Hirsch, who was the CEO of the ASTL, he was our MD at the time. And it was just a great place to be and a great place to learn.
Absolutely, yeah.
And a really solid grounding.
Yeah, absolutely.
I would say. Sorry, a very long answer to a short question.
No, well, also very nice to mention Benson's name. He died
3 or 4 years ago.
Yeah, but I remember the first time I met him, and he was brilliant. He talked about BMV deals, and basically, I think that the long story short is you should always be skeptical as a lender if someone tells you that they're that they've managed to secure a property below market value. And I think to paraphrase, it's like, what's so special about you that you managed to get this property so much cheaper than anyone else?
Yeah. And it was one of the first lessons I learned in bridging 20 plus years ago. Because I'm sure you're the same. You get a deal across your desk every day. I'm buying really well. Yeah. Oh, excellent. How did you do it? Oh, no, I got it at an auction. Oh, so it's an open market transaction, which is openly marketed to everybody. You've secured it for this price because that's the maximum anybody would pay for it, and you expect it to get valued. Okay, great. Let's go. And then what's going to happen? And again, we communicate pretty clearly with people. What's going to happen is that's going to get valued up. When the surveyor goes out, they're going to go, okay, so it was marketed for this period of time. This is where it ended up at an auction. This is what it sold for. That's typically the value. It's a good gauge. Listen, there are deals that do go through at below market value, but there's situation, and there's something about it that makes sense, and that's again, it's a little secret and a little knack of actually how to identify and spot those.
Absolutely. In terms of the competition in the market, do you think that there are now too many bridging lenders in the market? There's always been, Mike.
There's always been so many people, but you have got a core of really good lenders out there, who do a good job. You look at the market today. You've got some really large players who all offer something. You've got your West Ones of the world, your MTs, the Avamors, the Octanes, us together. There's a lot of really good people out there offering slight variations on each other, and there's enough business to go around, and people do buy from people, and people trust certain people for certain transactions, and there's brokers who will deal with all of us, and it's quite a healthy thing. What you don't want as a broker is to have all your eggs in one basket. I mean, I'd love that basket to be mine, but let's be real, it's important for a broker and for a client to that effect to have choice, and actually to spread their risk. And it's the same from a lender's perspective. You don't want to have 50% of your loans to one counterparty.
No.
So it's important that you spread your risk in terms of who you accept business from, as well as the clients. And from a broker's perspective, I think, and I don't want to use this word with brokers getting upset with me, so I apologize in advance if they do, but not to be lazy. Just because one lender does a great job for you on one loan doesn't mean they're the right lender for every borrower.
That's true.
And that, if I could give one bit of advice to new brokers out there, is find yourself a subset of lenders that you can trust, that you can spread your load over, because then you're not overly dependent on one. If one, for example, disappears, like what happened at the end of last year with a lender, which I won't name.
Yeah. This episode was sponsored by Avamore Capital. Ground up development, refurbishment, part completed projects, fast bridging. Avamore Capital backs you through every stage. Direct access to experts who understand your timeline and pressures. Fast decisions. Clear communication. No shuffling between departments or re-explaining your deal. From foundations to exit, Avamore delivers the expertise and funding solutions to keep projects moving. Visit avamorecapital.com. I spoke to a very well-known broker before Christmas. He's rather outspoken, which it doesn't necessarily
doesn't narrow it.
Doesn't narrow it down, but he was he was telling me that I literally can't repeat what he said to me. I think because I think even our editors might struggle to edit out what he says. That might give you a better clue. But he basically said he had in the diary a walk with a broker, with an RM at a very well known bridge lender. But in fact, he wasn't having that meeting. It was just in the diary, so that particular RM could have it in his numbers, because apparently their bonuses are determined by the number of meetings.
Are ridiculous.
Yeah,
I absolutely. I mean, if you need to go to that kind of level, you've got the wrong people working for you.
Yeah,
like genuinely, like you. Or you're structuring packages incorrectly for originators. What you want from an originator is hunger, drive, and a burning desire to deliver for a broker. If you've got that, everything else can be taught. And actually, if you've got that, you don't have to worry about meetings. Meetings take care of themselves.
Yeah.
The thing in sales, and I've been in sales my whole life, is there's nowhere to hide. There is, you have league tables, your numbers are published. This is within the firm.
Yeah.
There's just you either are doing a good job or doing the job, or you're not. And if you're not, the chances are there's going to be scrutiny on you. And maybe at that point, it's like who you're seeing, why you're seeing them, are you seeing the right people, have you got enough activity there? It might be because your product set isn't quite there and you don't understand it. It might be because you don't understand your appetite. It might just be because it's a difficult environment. You're going to go through peaks and troughs in your career. But to pay people's bonuses based on appointments, to me, means you may have the wrong originator.
Well, certainly the wrong incentive structure in place, right? Yeah.
Correct.
It's quite a fascinating one. In slightly changing direction, but maybe going a little bit back to the sort of Arrow Maslow model. Do you see more, more firms following suit and going down having a sort of international pan-European strategy?
It requires a substantial investment in personnel. I think people might try it from the UK. I would advise against that. I think some people will try it. I think you have the likes of, I think there's a 10 Capital who have a couple of different things, and Fiducium who have one or two, and then you've got Octane who do Ireland and Spain. So there's a couple who have multi-jurisdiction, but it's a big commitment to actually having the people on the ground. We're fortunate that some of our deals do traverse. So, for example, we originated a deal in Portugal last year, which was on a large villa. It was a 10 million euro loan secured on a 25 million euro villa. But we understood that area incredibly well. We had our team on the ground visit the villa the next day. We didn't have to book a flight to go and do it. We then had a report back within a day explaining the liquidity, because obviously if you're lending on a 25 million euro villa, you want to make sure you truly understand it. It's very difficult, Mike, to do that if you don't have the relevant people with the experience on the ground. And in order to get that, you have to pay a lot of money. So if people, I think some people might. They may, inject a substantial investment to build teams on the ground, but it's not just the teams. You then have to make sure you've got the right lending platform, lending documents, solicitors, surveyors, and everything else that goes around perfecting your security, as well as funding to fund in different jurisdictions. That's not straightforward either. And that's one of the really unique things that we have at Maslow, is that we've raised our own discretionary fund, which allows us to lend in each of these jurisdictions where we understand it, or where we've got relevant legal opinions in each one. We've got legal firms who've acted for us in these jurisdictions before. It does give us a head start. But yes, do I think people will want to do it? Absolutely, they'll want to do it. Whether they can do it at the kind of breadth that we have remains to be seen.
I suppose it, like you said, it requires an enormous investment, but whilst I guess at an institutional level, as long as allocations to alternatives remains high, allocations to private credit remains high, short-term real estate lending, whatever you think of the ups and downs of the UK market of the last 18, 24 months, across Europe, it remains probably a very attractive attractive asset class. So there'll continue to be a lot of cash chasing it for a period of time, for a long period of time. So then it's just a question of, you know, who's got the cojones to kind of go out there and do it. I guess there are some big PE platforms who probably would say, do you know what, we're going to go with this. Yeah. But you need to have, I guess the point is you need to have really deep pockets, don't you, to make that work.
Correct. You do, and you need to. Yeah, you need to. If you're going to do it, you got to really follow through. And I mean, it took me a long time personally to actually understand all the different dynamics of each jurisdiction, and I had a number of people and partners in each jurisdiction. I'm not the brightest in the world, but it took me a long time to just capture it, really understand it, and get underneath the bonnet of it so that I could support the relevant teams accordingly. But the fundamentals of risk remain consistent across whatever platform or whatever jurisdiction you're in. You know, the fundamentals of any transaction are going to be the same. Yeah. And if you have that correct, you put yourself in a good position. Yeah, absolutely. I can imagine with the amount of travel you've had to do over the last 3 years, it's probably not been great at times for the waistline. No, as you can see, it looks like I overindulged over the Christmas period. I think you've done a good job of keeping it off. It's difficult. And it's funny. My son is well into his gym at the moment. He's dragging me with him, and when we were away over the Christmas period, he was dragging me into the gym. It's good. Yeah. I'm trying desperately to stay healthy for the family. On the positive side, I guess you get. I guess you're not going to have to pay for too many flights with all the air miles. You're probably I have a lot of air miles, and that was quite nice actually being able to use some of those for our Christmas holiday. It's the most difficult part of my job is being away from the family, but. You know, they're really supportive. Both the wife and my son and my daughter have been really supportive, and when you have nice holidays, it makes up for it. Yeah, absolutely. Going back to the UK market, you know, we talked about we've touched on the saturation. Do you think that there is a likelihood or a scope for consolidation in the UK? Yeah, I think that there's going to be, there has to be. When you look at how many, as you said, how many lenders there are, how many new lenders are coming in, how much money is coming in, there is no doubt going to be some consolidation. I'm aware of a number of lenders that are already on the market. There's a number of propositions out there. I'm sure you know of a couple as well that are well into the process. You have to, the person who's done that best is Danny at West One. Agreed. He's had tremendous success in building and acquiring. I haven't seen too many others do it yet, but it's coming. There's no doubt. It feels inevitable, doesn't it? It feels inevitable. Obviously, Alika bought Tuscan. Yeah. But I haven't really seen the fruits of that merger, so to speak, or that acquisition, so to speak, since that's happened. I'm aware of a number of large lenders who are looking as well. It'll be interesting to watch the space, but I think this year may be the year you finally start to see the consolidation that everybody has been speaking about. But again, I think just watch the space. I think the thing that maybe raised my eyebrows towards the back end of last year was some of the relaxation of the capital rules by FCA PRA for some of the banks. And I think there were one or two challenger banks that broke cover, basically saying, right, well, with these rules being relaxed, maybe now's the time for us to start going on a bit of a buying spree. It does strike me that what a lot of the banks in particular, banks and funds in particular, they lack the origination capability, but also the servicing as well. Yeah. Because I think that one of the reasons why certain large banks like to do I think my theory has always been that they like to do the sort of wholesale funding, because they can deploy large amounts of capital without having to have the human manpower to service that, and they're willing to sacrifice a few percentage points in margin because
because they don't have to worry about the human cost of processing it. So,
but also their capital adequacy requirements are lower because
Correct.
their attachment point is at a much lower loan to value.
agreed. Yeah.
So it helps them from that respect, which is why they can give up a little bit of margin.
Yeah.
there. I think your biggest threat, I would say, but potentially opportunity in our sector, is the likes of Revolut, Monzo, deciding to come, okay, I want the piece of this market now, and actually spreading their wings, rolling up their sleeves, going, okay, it's time.
Yeah.
Because they're sitting on so much cash. It'll be interesting to see if they do make a play for it. We've started to see a couple of titles at some of these organizations for with lending against it.
Interesting.
It'll be interesting to see what happens there.
Yeah.
But I think that would be a proper game changer if they were to.
Yeah, absolutely. What did you make of the FHL acquisition of Catalyst?
It was an interesting one, that, because obviously Catalyst is still fairly new. How long have they been going? 8 years?
8 years, yeah, probably.
Yeah. And obviously they came from a broker world.
Yeah.
It'll be interesting to see how that plays out. Obviously, it's very early days. It only happened towards the end of last year.
Yeah, second half.
By all accounts, it looks like they're still sort of trading independently, but with the backing, I don't know. It's very early days. I think it'll be good for Catalyst if they can access the funding properly.
Yeah.
Because I think that was always one of the things that potentially held them back, was that the funding they had only allowed them to do certain things.
Correct.
But again, Chris is a good operator. They built a good business.
No doubt about that.
Yeah, and wish them well, as long as it's not at our detriment.
And what's your broader read on, obviously we'll have a UK focus, but obviously across more of Europe. But if we just focus on the UK for a second, what do you see as the trends for 2026? What do you think? What are you excited about, and what are you slightly fearful of?
I want to see how the Renters Reform Act actually affects the market, and whether what people are saying in terms of your smaller landlords disappearing, if that actually is the case, because we haven't seen it on the front end. What kind of effect that will have on lenders in terms of the repossession process on investment properties, and actually having to wait 4 months in order to get vacant possession. Will you start to see lenders in arrears and in that situation actually repossess with tenants in situ and sell with tenants in situ? Like, what kind of effect that'll have? But the big thing is still the fundamentals for UK real estate, and residential in particular, is that there's still a lack of stock.
Yeah.
And that underpins value, and continues to underpin the whole market.
Yeah.
And whilst the government is, trying to ease the burden on planning and everything else, there's still such a huge issue in terms of getting deals through Gateway and on a large scale development loan, and getting planning through, and getting through all the hurdles you have to get through to actually get something out the ground. So from our point of view, we are gearing up for a big 2026. We still think that there's huge opportunity there. We're still focusing on our core, which is residential/living sector assets. Although, as you'll see in the next couple of days when we put the press release out, we have just done an exceptionally large bridging loan against hotel stock. And I think that if you look at actually where the opportunities are for industrial, retail seems to be coming back in a big way. Co-living is still there. It'll be an interesting year. But the initial sentiment from the brokers we're speaking to, from the surveyors we're talking to, is that there's still plenty of transactions out there. You just got to hunt harder and fight harder for them.
Well, I mean, we had our second best quarter on record in the quarter just gone. So I would say that we haven't seen a lack of activity on our side. Certainly the types of developments that we're funding. Obviously, we operate across bridging, refurb, and developments, plus part complete stuff. We obviously haven't been doing an enormous amount of bridging, as we've discussed, due to the very competitive nature of that landscape. But on the development side, those small infill sites that we focus on have been, the activity remains there. That you don't have Building Safety Act issues that get in the way. There have been very few higher rise, taller buildings that have come across our desks in terms of lending opportunities, which probably mirrors a lack of appetite from the developer community to do that. The point you make about retail is interesting. Semi-commercial seems to be a real hot topic amongst the broker community. It seems like the exits are very much there on the semi-commercial, which should give people in our position much more
even on the commercial
confidence.
Even on the commercial, I'm starting to see far more liquidity in the 2 and 5 year space.
Interesting.
We monitor what's happening in the markets a lot because you have to understand where you're exited.
Correct.
If you want to talk about how you underwrite, you have to understand the whole market in order to know where the liquidity is coming from. And there is no doubt that we've seen a huge amount of liquidity come back into the commercial, semi-commercial space. And at high loan to values, 70-75% for commercial on a 2 or 5 year term. It's good signs for our space.
I would say that is very encouraging signs. I suppose with falls in interest rates as well, although not necessarily how the funding, not necessarily how the
hasn't flown through yet.
How that filters through is obviously more complex than that. But I think it does probably lead to slight increases in confidence as a commercial landlord, as a family. It gives me encouragement, shall we say? But I've at the same time, I'm not counting any chickens.
No, not yet. Listen, it's early days, but if everybody wants to keep talking the market down, it becomes a self-fulfilling prophecy. I think that you need to. I've always been a glass half full kind of guy. Maybe that's because my background's always been in sales and what have you. But if you look for the positives and you're trying to find the positives and you're trying to find those green shoots, if you look hard enough, you'll eventually find them.
I think we're in the process of doing basically a thought piece, which we're sharing which we're going to share with everyone in the market. But I think the underlying sentiment that we're putting out is we're sort of cautiously optimistic. We're not expecting a sort of big bang, excitement. There's definitely, we think it's going to be steady, with some slight improvements. But there's always going to be the potential for headwinds, and those might come from international external shocks, or they might come from legislative changes. Hopefully fewer than we had the last couple of years. But
although even those weren't as bad as people thought they were going to be. Like, for example, in the last budget, everybody was petrified about what was going to happen with stamp duty, what was going to happen with mansion tax, what was going to happen with planning rules, and okay, it wasn't great, but at the same time, it wasn't, this is the end of the market. And what typically happens with legislative changes and issues with stamp duty and issues with everything else is people sit on their hands for a little while. Then the news comes out and it's like okay, back to business, because they have to actually make it work. And it's just, what you don't want to be in that situation is gung-ho as a lender and providing the highest leverage and taking the most risk, which I don't think any of us do.
No. Well, those of us that remain that remain actively involved. I mean, we have a slightly perverse attitude when a new lender comes into the market, and our RMs start complaining that they can't compete with those terms. Zahir and I, we sort of turn to each other and go, "Good. We know how. We've seen this. We've seen this story before. We've seen this story before."
Exactly.
No personal guarantees on development lending. Okay, good. Good for them.
Yeah.
Let's see how that plays out.
Exactly. I mean, a lot of them don't even want cost overrun guarantees, let alone personal guarantees. It's astonishing.
Yeah.
But yeah, listen. History has a a tendency to repeat itself.
Yeah.
And you and I have been around long enough. You see the people come in, you see them go, you see people, literally throw the kitchen sink at the market. Understand that it's not just as simple as you get a charge on the property, you get your money back. And it'll be the same, I think, moving forward. But there are more sophisticated players. There are some very good operators coming in. There's already good operators here. But I think it's a positive time, and I'm going into this year, as I said, really positive. Listen, do I think we're going to shoot the lights out and just do every deal that comes across the desk? Absolutely not. But there's enough business out there for a huge number of lenders.
I'd be inclined to agree with that, and certainly the response we've seen since we've got back to the office since the new year indicates that we're not going to lack not going to lack things to do. Moving away from work, you're quite well known for enjoying your time on the golf course. Have you been able to get enough rounds in of late?
I have. I actually haven't played much since November. I'm a bit of a fair weather golfer. I don't like it. It gets too cold for me. I'm quite fortunate that our parent company Arrow, and especially in Portugal, own a number of golf courses. Some really good golf courses as well. So I have been able to partake in that. I love my golf. I like to actually, in the summer in particular, I like to spend time with my broker community, with my clients, actually on the golf course. I find I get real good quality time with them. You get to actually, spend proper time with them, as opposed to have a coffee, have a beer, have a quick bite. You can really get underneath the surface and build some proper relationships with people. And I've done a number of really good deals on a golf course, actually. I remember playing. I'm part of a property investor community golf society, and on one of our golf days 3 years ago, I closed a £37 million developer exit loan literally on the golf course.
Amazing.
And it does happen. A lot of people in property play golf, and you do deals on a golf course. And anybody who says otherwise is either spending the whole time in the rough or I don't know. I find it. I enjoy it. I enjoy playing with my son as well, but I enjoy it for work, and I enjoy it. It's just as a nice time to switch off.
I've been trying to get at least one of my kids into playing. I've had a bit of a break from golf because I think I'm one of those people that if I play a sport, I want to play it really well, and the amount of time that you've got to dedicate to it, I would rather dedicate to other sports. But I'm seeing some justifications from a professional side to spend a bit more time on the golf course.
I'll tell you, it is worth it. It definitely is worth it. But the secret is getting one of your kids into it.
Yeah.
So my son is golf mad, and it's actually really nice to spend time with him on a golf course, because it's just the two of you. You get a lot of time together. You get to have a proper chat. You get to see the temper tantrums, both mine and his. But no, it's a really nice way to spend time with your kids, if they're into it.
Absolutely. A friend of mine who also has discovered the hack of taking his son golfing with him. I think it's been a genius way of him being able to justify spending as much time playing as he does. But he says you can tell a lot about someone's character by how they play golf. Is that something that you?
Yes.
Yes.
When I'm on a golf course with somebody, especially if it's a client or a broker, absolutely, you can tell a lot about somebody.
What's the biggest red flag from someone, how someone plays golf?
When they don't know how to count.
That's very obvious, actually.
But you say that, you see that a lot. But yeah, no, it's.
I was going to say, where they place their ball well on the tufts of nice. No,
I mean, listen,
nice
when you're playing corporate golf, you typically have preferred lies. If you can't find the ball, you give them a drop or a one shot drop, or depending on what role you're playing in, you give them a free drop. It's not really that. The things that come out in golf is just. You can tell when somebody is just it doesn't happen often, but occasionally you get to the green, you're like, oh, what's that for? And you're like, because you've counted. It's for a 4, for a 6. And he goes, yeah, it's for 4, for a par. I'm like, oh, okay. Excellent. But you do see people's characters on the golf course.
That's fascinating. Obviously, we've got to wind up very shortly, but thoughts on Arsenal's title chances, Mark? How are you feeling?
I am so desperate for them to win the league. I am praying that they don't bottle it again. Although I don't think we've bottled it that much the last couple of seasons. I think City have just been too good, or Liverpool have been too good.
Yeah.
I am a huge Arsenal fan, as you know. I'm very vocal on all my Arsenal groups. I am desperate for us to win. I will be positive if we come out of the City game in April ahead of them. That's when I'll start to believe. Until then, I am hopeful and cautiously optimistic, but I won't believe until we are through the April period and through the City game. If we come out ahead of them then I will start to believe.
I think that's fair. Well, first time for... I think I trust them. I trust this side more than the last couple of title challenging sides.
Yeah.
This is the one I feel like I trust them the most. But
I think we've got the most depth we've ever had. I can't remember a squad.
Best squad in my life, I think.
Mine too. I'm really pleased that we've got Jesus and Havertz coming back.
Yeah.
I'm worried about goals from non-set pieces, but if we keep scoring from set pieces, so be it.
Well, we just signed a throw-in coach, so it's only going to be more. No. For those of you that are still with us, thanks for bearing with. But Mark, closing tradition, what would be the advice you'd give to your younger self? And you can pick any age and why.
Be more patient. Things don't happen immediately. I like my. I realized when we went through the COVID period, and my son I had to homeschool my son, and I realized that actually, we learned that he had ADHD and how that manifested out and how that played out, and I realized very, very quickly that he was a carbon copy of me. And actually that ADHD, when you harness it, can be a superpower, but Absolutely. It can also be your biggest enemy because you expect everything to happen immediately. And it's actually having more patience with yourself as well as having more patience with those around you. I think that would be the biggest lesson, is that things don't happen immediately. And I think with the current generation and with myself, if I wind the clock back 20 years, I expect it to be, where I am now, then. And it doesn't happen because you actually have to learn. Absolutely. And you have to make mistakes, and you have to learn from other people around you and surround yourself and become a sponge from people, and that takes time. It doesn't happen immediately, and this concept of immediate gratification is a real fear for me for this next generation, and trying to teach them that if you give it the time and you put in the effort and
results will follow.
Soak it in, the results will follow.
Love it. Mark, thank you so much for coming in. It's been an absolute pleasure. I'm sure all of our audience will have absolutely loved that. If people want to reach out, what's the best way for them to get in touch?
So on the Maslow website is my mobile number and my email address. I try and be as contactable as possible. I do get a lot of emails and a lot of calls, but I typically reply to most of them.
Love it. Well, thanks again to Matt, who's been helping us with the technical side of things here today. Thanks to Avon Capital for their support. Thanks to producer Davina. Thanks to Versta, our editor. I've been your host, Michael Dean. You can find me on the internet at property_funder, and we'll talk to you again on the next one. Thanks, and bye-bye.